Welcome back to Abundance Thursdays. This is Walter Morello, and I'm hanging out with Vinney Chopra. Vinney, where are you hanging from today?
Well, today I flew in yesterday into Long Beach, Southern California. We had a very nice conference, actually, of the family offices, about 100 people maybe there. And it was lovely, lovely, like fireside chats and meeting with lots of great investors, family offices, operators, all those people. So that was wonderful. I'm in Orange County today with my brother Craig. Yeah.
You and Craig are all over the place. You guys are really just working this fund.
Yeah.
It's like the
Yeah.
$100 million funds are keeping
Yes.
you active. It's like they say you got to have
Yes.
kids later on in life. You decided to go and create funds later on in life.
Yeah, it's a lot of work, a lot of work, I mean, sometimes people feel that, oh, it's easy to raise, 1 million, 2 million, 5 million
Right.
from the investors, accredited investors and all. But it's a lot of work, a lot of meetings, lots of, decks that we go over and what the ins and outs, the benefits. Then only, people are able to make their mind whether they want to go into the projects or not. Yes.
So there's a lot of education. There's just a
A lot
lot
of
of
education. Yeah. Hmm.
like traveling and doing events and obviously inviting all of these family offices and all of the different financial planners
Yeah.
and getting them all together. Uh,
Totally. Totally.
why do you still do it,
Telling the,
Vinny?
the vision, the vision. Oh, I don't know. I don't know. I just love it. You got to keep your mind right, have focus and make sure that, you're pushing, pushing the needle. The biggest thing right now, like I've mentioned, with hospitality, where after the tourism, got really cut down quite a bit, in the COVID time. Now people are traveling more, and the ADRs, average daily rates, have gone up higher in tourism spots, and also, the occupancy has gone up. So it's really desire that we are able to do some good projects in the Hilton, Hyatts, and Marriotts. That's the only ones we do, right? And then the other one is the senior assisted living. At this family office, also, I heard quite a bit about demographical shifts. We're going to talk about that today, because silver tsunami is sweeping this nation and the world, where so many people are turning 65, 70, 75, 85, and so on.
So you just slipped into the principle. So the principle is abundance. It's about demographics, the power of demographics, understanding demographics. And today in this topic, we got 4 different things we can look at. We look at the target audience, the investment
Yeah.
opportunities themselves, the market trends, and long-term vision. But you just teased a little bit demographic shifts. Like the silver tsunami. Can
Mhm.
you just explain what the silver tsunami is for anybody who hasn't heard this before?
Oh, sure, sure. Silver, just like the hair silver, when you get younger, I never say getting older, but as you get, older and older, the gray hair brings that, the knowledge and everything, and people are turning 65 in USA. We say senior citizens. Sometimes we get even discounts at 55, 60, but 65 is the age that we look into as turning baby boomers are turning 65, 10,000 of them every
Wow.
single day, 10,000. So that's a lot. And then, of course, people are progressing from 69 to 70. Also, I got some statistic like 4,000 almost, every day turning into 70, and then maybe 3,000 into 80, 85, like that. So as people are growing older, there are different needs. Demographical shifts are happening where people are moving from the colder states of United States to warmer states, like coming down to Virginia from New York and up in the Pennsylvania, Florida, Arizona, where there is, and Texas also quite a bit because of the warmth, warmer states.
And this is so where demographic shifts and migratory patterns come into play is like a certain demographic starts making a move. And what you're talking
Yes.
about now is the biggest generation, the baby boom generation, how they're shifting to the south. They're moving to warmer climates because it's easier to just live, maintain, which we are seeing real estate prices shoot up all over the south. And
Yes.
that's something that you're thinking is going to continue trending going over the next decade, 2 decades.
Oh, yeah, almost 3, 4 decades actually. We are looking at the total migration, or demographical shifts as people are getting older and older and older. Then it's going to become the amenities, the housing needs, all the different products also, by the way, will be changing as we go through trillions of dollars every year that will be spent in, of course, medicines, hospitalizations, senior living, assisted living, hospice, all that. There are huge statistics that are out there where we will be making shifts. We are about 56, 57 million, seniors now, but it's going to be almost like 100 million. Oh my gosh, that's a lot, 100 million in the next 30, 40 years. And then also the 75, 80 years of age, they have different needs. That's the other part, these seniors who can afford to, they love to be away from the hustle bustle into more residential communities and also near to the golf courses and lakes and streams and rivers like that, so that they can have a very peaceful, their golden years, I call.
This is important for real estate investors, because if you're investing in an area that is decreasing in population, or you're in a niche that is no longer capable of serving the elderly, let's call it, third floors without elevators, or second floors without elevators, they start becoming
Yes.
obsolete pieces of real estate. So being in the right location, having the right type of asset, this is what you're talking about. This is some of the stuff you've been doing, which is why you're building the assisted livings. You're focusing on the hotels, it sounds like, because
Yes.
these seniors are traveling more, right? They're in the vacation
Yeah,
years, the
they
golden
are.
years.
They are. Exactly. Millennials are too, by the way. Travels are coming from both sides with families, single, all that, because COVID kind of crunched it up. A
Yep.
lot of people were afraid to travel and the occupancy of the tourism went way down. But now, after COVID, there are statistics out there where it's gone back in the same trend. It went down a lot, tourism, occupancies and travels and all. But now, post COVID in 2023, 24, 25, we are seeing a big slope upward again. So that tells us that a lot more people are traveling and they are going to tourism spots and all that. Yeah.
It's interesting because I'm looking at the description we created for today's call, and it talks about market trends, and it says demographic trends provide insights into the demand for specific property types, where
Hmm.
a surge in young families might indicate a need for larger homes. An
Yes.
increase in single professionals could point towards demand in smaller units. And
Yeah.
what we're actually talking about is a shift of the aged population selling their larger homes that they had built for their families, and
Yes.
downsizing, shifting into either facilities which have more amenities, or
Yeah.
single level buildings, or like just smaller housing because they don't need as much anymore. And again, moving to the south, moving away from the major cities and into the south. How do you think this is going to impact a lot of investors right now, like the ones who aren't
You
paying
know,
attention?
That's a good point. That's a very good point. I would say definitely this is the big tsunami. We talked about the silver tsunami. There is another tsunami, I call it millennial tsunami. Now, those are the young ones, the generation X, Y, Z, Gen Z, we call it. They are the ones, younger ones also are moving to go to rentals, more rentals than purchasing properties, or they don't have the down payments, or interest rates are really high. So that's also, there is a shift with the millennials moving to more apartment rentals. That's why we say in USA there is a big shortage of apartments in different demographical areas, MSAs we call it, metropolitan areas. The key thing is we need to be keeping an eye on two major segments, that's millennials as well as our silver, seniors, and then also immigration. Immigration has been kind of a little bit lower, but that's the other ones in our business of rental business. Those are the three different segments that can really push lots of people moving from state to certain states, and then from few cities to other cities and so on. So we have to, just like we are talking today, demographical shifts, feasibility studies, the buying power, the renting power, the net worth. Like in our case, in the assisted living and memory cares, we have to look at the net worth of the seniors, what they can affordability is, where we are putting these senior centers.
Absolutely. It's
Yeah.
interesting because we just submitted an offer on 35 units in Illinois. The rents are super low. They're like $600 a month. We think we can get them up to
Wow.
750, 800. And
Yeah.
it's a completely different market from what we are here in Tampa, right? This is completely different. You know,
Wow.
rents here in Tampa are 3,000 a month, 4,000 a month. So it's
Wow.
yeah,
Wow.
the differences are like buying power, right? That makes a big difference. There's no jobs in Illinois, well, this little city
Yeah.
there, and
Hmm.
here in Tampa, it's all jobs, all entrepreneurs, all salespeople. Just there's a lot of money being made. And what do you think the long term vision would be for, you know, just as a real estate investor? Where would you be putting your time? Should it be in?
Okay.
Yep, go ahead.
No, I would say, Walter, that probably the build to rent market, where again, you could do more rentals, or we could do smaller units where people can purchase also. So the size has to be kind of shortened right there. And also looking at different MSAs, we call them MSAs, emerging markets, right? So essentially, anybody who's developing, or they're pulling the permits or buying land purchases. I know a lot of land purchases going on right now
Sure.
outside the big MSAs, because they want to sit on it for a few years. Then as the cities are growing, there's a huge shortage of housing in USA. Let's just make sure that's everybody's clear. The other part is that the millennials who were staying with their parents and grandparents and all, they're coming out also, right? So they want to rent or they want to buy townhouses, smaller units, with remote working, I should say. And then also, if the companies are allowing them to work from home, maybe some small office space will be also in the trends, as people are building more and more and more. Could be 2 bedroom and a small office, or 1 bedroom and a small office, to operate. And those are the things, which lots and lots of developers are looking into.
It's interesting. I think the podcast room is starting to become a famous or a thing, a studio, a podcast room, a place to take pictures and do
Yeah,
video.
yeah, yeah, yeah.
I know I've got one. I know you get your office is now turned to a
Yes,
studio.
yes, 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 yes. So true, so
So
true.
it's interesting that is actually something that I've seen some developers include in their developments is a podcast studio in one of what was previously an office. They just made there's a commercial building. They said, hey, here's a podcast studio. Everybody can use it.
Look
And
at that.
it's
Look at
like,
that.
man, like that's clever because it brings tenants that are going to be doing a lot of podcasting.
For sure, for sure. Good, high, solid, internet and everything, and providing the amenities. It's one of the amenities, like, the exercise rooms and all these different things that we built it. And in one of my communities, there is I think it's called thinking room or something, where you come and you look at your ideas, and it's almost like a small setup of a startup, let's
Like an
say.
incubator kind of
Yeah,
vibe.
incubator kind of thing. Exactly, exactly.
So
That's interesting.
I want to go back to the funds. You wouldn't have started $100 million fund in hospitality if you didn't think there was a huge opportunity there. And I know the same thing with the assisted living.
Yeah,
I want to jump into the assisted living because I think that one is so interesting. It's the silver
yeah.
tsunami. It's the big weight. There's this very heavy. I think it's tough for
Huge.
people to get into, right? Because there's a lot of management involved, there's a lot of knowledge you have to have, staff, and you picked a niche that is hard. You also picked the niche that you have a lot of skill in. So even though it's
Yeah.
hard for other people, there's a barrier for entry for others, but for your team, it's actually relatively, well, it's not easy, but it's something you're very good at.
In
Where are you seeing the growth mostly? Like if you were to say like I plan on buying, $1 billion is going to be in these states, where are you putting most of your weight?
That's a very good thing what you just mentioned, Walter. In these businesses, just like in hospitality, it's real estate and then it's operations. So there are two businesses in there, right?
Right.
One is the real estate part of it, other is the operation part. So I have seen over the last 4, 5, 6 years, as my portfolios, we have sold a lot and all. We used to vertically integrated. We were managing everything, all that. But now we do third party.
Wow.
So third party is a better way to do in my case, because that way we can manage the managers, and the third party is professionals, and they have their whole accounting setup department. Then they got regionals, they got community managers, they have other properties they're managing in the neighborhood, all that stuff, right? So that's what we are doing with our multifamily also. We'll be doing the same for hotels also. We will be working with third party who are certified for Hilton, Marriott, Hyatt, IHGs, like that. Same thing. Even though my daughter and I and my partner, we have been managing senior assisted livings also. There is a big lot of work, lots and lots of work. So we are thinking with the new developments to hire third party for that also. So it's a good thing that you can look at. Okay, if you're going to be buying the real estate part of it, then the operation side, you could get a third party, or somebody who will have a vested interest, maybe make them a small partner also. That's what we are trying to do in Arizona, where we'll be having our own executive director who will be a partner with us in the management side of it, and she's got lots of experience and things like that. Yeah.
Vinny, you just gave away a lot of secrets. One is when you shift back into growth phase, use third party. When you're
Yeah.
in capitalize on what you already have phase, that's where you vertically integrate. You take a lot of stuff in house to save
Yes.
expenses, to make sure things are a little more efficient. But you're shifting back into growth phase, and so
Yeah.
to grow and acquire fast, it doesn't make sense to try to vertically integrate everything along the way.
Exactly.
It's a very
Yes.
slow system. So in order to
Yeah.
speed up the acquisition, which again points to everybody who's listening, how important it is to be in the market, looking at things now, taking action. These windows don't last forever, right? Windows of opportunity,
No.
although we know the silver tsunami the last 30, 40 years, it's the guys who are locking in now that will
Yeah.
have the opportunity to capitalize on that 30, 40 years, right? It won't be 40
So
years from now.
true.
The opportunity doesn't get into it then, it's get into it today.
No. So true. So
Invest
true.
today.
Yeah. And the other part is I want to share with everybody. Of
Yeah.
course, there are some RALs, we call residential assisted livings.
RALs, yep.
33% of in USA, they are very old, and they can be brought to more amenities in there if there is a space nearby, in those locations. That's a very good value add, situations also. And then converting some of the hotel suites, or even could be even some strip shopping centers, who could be, if they are closed down, to convert them into senior living. So there is so much repurposing also, avenues are there for people to look at. The other part is, if you're buying a land, you have to do a good feasibility study, because you will be going through the permitting from the local government jurisdictions and all. Then you'll take a construction loan to build it, and by the time the product comes out on the other side, it'll be 2 to 2.5 years. So you
Wow.
have to have a good solid business plan, and also have a solid feasibility study to make sure what other centers are being built around you, what's out there already in the 30 to 40 miles radius, and then how many more permits have already been issued for other builders and developers to bring assisted living, memory cares, which we are in, and so on. So it's a very systematic process to figure it out with the demographical shifts, then finding the right locations, then lands that you have to go through permitting. And then we usually put lands on 6 to 9 month, what do we call it? A due diligence, because that land is no good for us unless we get full permits.
Right. So what about right now? People think that it's pretty easy to invest in real estate right now, for sure. That's a thing. And we hear that Starbucks is something you should look for when you pick an area. So
Yes.
I hear a lot of people saying, "Oh, there's a Starbucks. It's a good area. Like I should invest there." How true is that? And that may be true.
No,
What did you see?
that's a good point. That's a good point, Walter. That's a very good thing, and it's very appropriate today when we are talking about demographical shifts. Remember, every MSA, every city has north, south, east, west, and then we need to find out from the local authorities and brokers and property management companies and chamber of commerce and business, directors, where is the growth coming in that city? Is it to
Community
the now?
development,
No,
right? The community development.
yeah,
Yep. Okay. Okay.
exactly. You see, it's the Northwest is where most of the population is increasing that way. So we find Starbucks and Best Buys and Walmarts, Sam's Clubs, they spend millions of dollars to find and do these studies where the demographical shift is going to happen in that particular city. So that's the secret. You got to really look at Starbucks. If Starbucks is opening soon, and there are some cranes in that part of the town, and the Best Buy is opening, and Sam's or Costco is opening, that more population, more dwellings will be coming there. So it's good bet to kind of go into that area and look for real estate.
I like that. And there's another one that I have heard. It
Mhm.
is the laundromats
Oh,
and family dollars. What do those mean to you?
mm, okay. That's a whole different game now. Let me share with you. Family Dollar or dollar stores and laundromats. The purpose behind laundromats is where apartments, those apartments who are like in the C class, usually C minus, or like that, who may not have laundry facilities within the apartment complex, then the residents have to go outside to, wash their clothes and everything and take care of the laundries, right? So you have to be very, very careful where you are buying the laundromat and what's the history behind it. Because I've been looking into those with my students in the academy and all. We have learned a lot that you have to really be sure that not A areas will have too many laundromats. Maybe there will be a laundromat which is very high caliber, where it's a laundromat with
Dry cleaning.
van service, dry cleaning. You got
Yep.
it. You got it.
Like tailoring,
The
they'll fix the suits.
tailoring.
Yep.
Yep. So there is a different high caliber laundromat and dry cleaning in those areas. But the ones which we find in the regular laundromats are in the C class, C minus, where there are no good many facilities within the apartment itself, because single family homes also usually have a washer and dryer even in the garage,
Yeah.
so they don't really use laundromats. So it's a big kind of like a science, how to find the right locations, how to do it online, how to promote your business, all that. It's a real estate and then a business
This
idea,
is
right?
this is
Yeah,
cool. This is a
together.
lot of information. So for those of you who are getting value out of this, Vinney
Yeah.
has been in the business for a long time. He's written 3 books. His next book is coming out.
Yeah.
And one of the things that I've learned from Vinney from over the last year of doing this is positivity brings profitability. You do have to have,
Yes.
a positive mindset. But the other thing that
Mhm.
we got really deep into it today was the technical side of the deal has to be
Yes.
good. Like you have to be in the right
Yes.
area, the right location. And they
Yeah.
say it in real estate, location, location, location. So
Yep.
one of the
That's
basic
so
pro
true.
tips we got today was, stay away from the family dollars, move towards the targets. But if you're looking for C-class property, if that's what you do, then
Yeah.
now you have a
Mhm.
better idea of where you're going to be. Vinney, there's a lot I could ask you about demographics. This is like a thing that there's so much information on. Could
Yes.
you explain the classes? I noticed you were talking about C class, B
Oh
class.
yeah. Sure. Sure, definitely. Walter, we usually start with the A class, which is the top. It is the newer buildings, newer, nicer areas. Neighborhoods also are A plus, we call it. And then we have the properties which are built in the last 10 years, 15 years, usually we say those are A class, less deferred maintenance, very good modern amenities. And, people high, like maybe white collar workers, right, like to live there, right there in the A class. Then we go to A minus or B. B class is a little bit older properties and a little bit, older neighborhoods. That's how we go B class and B assets. Neighborhoods and assets, we call it. C usually are the ones working class, and more of the service industries. They are older properties in the 80s and 69s and 70s, all that area, right? Those are the C class. Now D class we kind of talk about are the ones where there is like like, as we shouldn't say that, but there are some drugs, and so forth, and the caliber of the residents also is lower, a little bit lower, but just because of, unfortunately, they are not making that much money, they can't afford. So the D class in D areas, I've never purchased them because it's really, really difficult, unless you buy a D asset in a C class is a good one, or buying a C in a B class, or buying a C asset, older asset in A class is the best of the best. Which I remember Alamo Heights comes to my mind in San Antonio. When we moved there, my partner and I, we were able to buy C class and we made a lot of good money in A areas of Alamo Heights.
So you just got everybody listening right now. You just got the classic best way to invest in
Thank
real
you.
estate, which is buying the worst, buy the worst house in the best area, buy the worst asset
Yes.
in the best area, and then reposition the asset. That's
Yes.
force appreciation. Fix the building, get it to where it
Yes.
deserves.
Yes.
We were a little over time, but I had to get that move added. So, Vinny, I know I know you're busy, man, but thank you so much for
No, thank you. Thank you. It's such a pleasure to really do the broadcast today from Orange County, right here, and it's such a great. And please join us next week again on Thursday at 9 a.m. Pacific, 12 noon Eastern Time. Thank you so much, Walter. Thank you,
This is
brother.
Abundance Thursdays with the great Vinney Smile Chopra. Cheers to your success. We have a choice. Always work with the best. We'll see you next week.
See you next week. Bye bye.